And I just want to welcome everybody to the call. And just to let you know, this is kind of a meeting of the minds, if you will, in Canada. A gathering of those that I feel have some interest in faith-based investing in Canada. And some of you are in different roles, some in the advising role, some more in the portfolio management role. And I think there are opportunities for each of you. Some of you have different exposures, obviously, to faith-based investing. You all have a connection with Kingdom Advisors, which is the commonality, the common factor here today. So we will have, this is how I have planned out our time together is I'm going to introduce Luke Bolton, who is, as some of you have already learned, is in Minneapolis, Minnesota, and a recent hire with Kingdom Advisors for strategic relationships, which I thought was interesting, which is, I think, also part of the reason why I would like to have him introduced to everybody here, because it's important that we have those strategic relationships in Canada as well. But Luke does have a bit of a background in faith-based investing. And Luke, I'll get you to share some of that as we get going here. So welcome to our time together. So Luke will give us a brief presentation. And then after that, I want to have a bit of time for Q&A, questions for Luke, but even questions for one another, because I think it's important that we all know where we are in Canada, not geographically, obviously, but when it comes to faith-based investing, what's happening and what do you see happening on a go-forward basis in the coming days. So, Luke, I'm going to pass it over to you, my friend, and you can introduce yourself a little bit more and then jump into your presentation.
Thanks, Lauren. Thank you all for making some time here, and I appreciate your just joining in here. It feels like a really important conversation for a group like this to be having together. So my background, if I go back early in my adult life, I was studying theology, thinking that the Lord may have had me in a path toward teaching theology, like a seminary type of a career path. I did theology undergrad, biblical studies seminary program, and was looking for the next step in life, starting to have a family, and the Lord directed me into wealth management. And that felt like an unusual assignment, and I struggled initially, like, Lord, what is going on here? Why wealth management? And so in that space, I discovered the Lord's intentional placing of people into the workforce where he chooses. And this became the place where the Lord has called me to sow and to plant and to pray and to collaborate and to try to apply the biblical thinking that was provided in my training into an important sector of work and an influential section of his harvest field. So I feel like this is a unique calling and a place for us all to apply our faith. And so for me, it's a passion to talk about faith-based investing, not only as a theological interested person, but also for the last 10 years working in wealth management. It's been my joy to help an advisor's office build out our own faith and values investment models, as well as to help on a larger scale with a national firm that asked me to help them also lay out kind of the guidelines for a faith-based investing model for their advisors, and hundreds of advisors now using that as well. So it has been a journey and an exciting one to see what the Lord is doing. I am prayerful that this could be just the next step, a small step in what God is doing for Canada and how he's placed you in unique places there as well. And so kind of the direction of my talk is an invitation to leaders to reflect on a biblically informed strategy for investing. And so that will be kind of the direction that my talk takes for the next half hour or so. And then I look forward to hearing you guys think about out loud together how some of this might apply in the context that you find yourselves in there. So with that introductory material, I'm happy to talk through a number of these topics with you today. Just kind of as kind of a, well, of course, what you hold to as a Christian will impact the way that you come to work and the way that you show up in the workforce. And so the invitation here is to be reflective and intentional, to be biblically informed in our understanding of what God might be calling us to do as wealth managers, investment advisors, and whether you're in a role facing clients or in a role producing products or something in between, that you would be thoughtful to apply what God is calling you to in that space. In general, this type of leadership requires clarity around three things. One being an understanding of where we are today, the context, and this being for you, the Canadian markets. Just an invitation to reflect together here about where is the situation at today. Secondly, leaders need clarity around, where is God calling us to go? What is the goal? What are we supposed to be aiming for? And we'll talk about that a little bit later. But thirdly, the area that we need to be clear on is strategies. How can we move from where we are today to take the next step toward the goal that the Lord has for us? So that'll be our outline for the next few minutes here, just talking about the context, the end goal of what it might mean to be faith-motivated investors, and some potential strategies that could be of interest as well on that journey. So let's dive in. And I'll perhaps obviously be speaking from a U.S. perspective on the markets. I will try not to emphasize that unduly, but you can hopefully see some overlap in your space there and help fill me in on what some of those differences might be. When we think about the public markets, and that's where I sit, is the public markets, I often like to zoom out and try to think of it in a big picture context. And so if we do that with the markets that I'm familiar with, I like to lay it out very simply, perhaps overly simply, but with a chart like this that just kind of groups players together in different buckets. So starting on the left-hand side of this chart, you can see investors, savers, whether it's individuals, families, institutions, with excess capital that they would like to save for the future use. And then way over on the right side of the chart, you have people with ideas about how to use that capital, whether companies, cities, governments, or agencies. Ultimately, you have users of the capital on the one side looking for it, and the other end, people who have something to save. I imagine that most of us find ourselves in the second box from the left, an intermediary position where we are facilitating access to the markets for people who would like to save long term. And so in that category, you have investment advisors and investment firms providing access to tools like stocks, bonds, mutual funds, ETFs, etc. And that ultimately allows people to place their capital in to the markets where they're buying and selling from other investors, typically those products. On the other side, sitting between the companies and the markets, you have your investment banking and your newly issued investments coming to market for the first time there. And so this perhaps just, you can find yourself on the map really easily this way and see, where do you sit today in relation to some of the other players that we'll be talking about. Another, and this will be my last comment, section of comments about the context is, this, I don't know if this applies as much in your perspective. It may. We have a particular bias in the U.S. toward individual rights, individual preferences, individual everything. And so I like to remind people generally that investing is not something you do by yourself. It's a social endeavor. You're always going to be doing it in relationship with other people. And so we need to think through at least a little bit the social nature of investing. And I'll just make 5 quick points on this, that even something as mundane as the public markets are indeed relational. That is, The markets are set up as a system of relationships. It's a set connection between different players doing their role. And so in this way, indirect relationships are set up all along the food chain between all of those different players. And so in some sense, you could say that an investor in Canada would have some indirect relationship to projects going on around the world, whether it's the building out of internet access in Africa or the distribution of Pepsi and Coke in the Philippines. All of those different types of activities are interconnected and could be ascribed in some relational way to the investor in your context. So everything interconnected, no one does it by themselves. That's kind of the first, oh, well, duh. But just to add a layer of detail to that, these are not like all of your best friends. This is not your family. The public markets relationships are not face-to-face where you have a lot of control over what happens. They are institutional in nature. And so there's a much reduced level of control about what happens beyond your step. And so in face-to-face relationships, you have a lot more control, a lot more connectivity, a lot more responsibility. In the institutional networked connectivity of the markets, you have a lot less control, a lot less visibility, and in some regards, perhaps reduced responsibility for those outcomes. However, why does it feel like the markets are impervious to control by one person? Well, perhaps obviously they're so large, there are numerous players, but also the regulatory environment, I think, plays into that as well. That the relationships that are established have been codified and that they are regulated. And in our case, at least, go back to the 1939s and 40s regulations that we are dealing with here. You have your own history of regulation, I'm sure. But those relationships are pretty well defined in the fine print, prospectus type documents. And so someone might say, well, okay, institutional, why should I even worry about my relationships then? It's all out of my control. Well, I would come back with this comment that the public markets are adaptable and they do change over time. Social movements, activist investors, public response, political engagement, different factors play into changing of the market's landscape over time. And so it's not an immovable enterprise. It's just not controllable by one individual. It's more directed by movements of people, and change takes place slowly over time. Fourthly, I would just comment to say that this context is one where we should expect to interact with people who are different than us. The markets are a pluralistic environment. Many different people come into the space and work together at some level to do their piece of the action, who do not have shared values, who do not have shared faith perspectives, and who may come at it from very different perspectives of what is true, what is good. And so that's just the reality. We're not going to the markets like we might go to the church or to our home. This is a place where we expect to meet the public as such. And it's in some ways, I like to compare it to like going into a public library or going into a public park where many different people are going to be there. And you're going to be there as well doing what you're there to do. But that each person has a place, and that it's not just going to align with one group of particular people's values or beliefs. It's going to serve the whole community. Which brings me to my last point, and that is that the markets are purposeful. And in my thinking here, by purposeful, I mean that it serves many different purposes. It has a function that serves many different people's purposes. That is, by moving money back and forth between savers and users, the markets facilitate lots of different purposes along the way. So you might have an investor's purpose of saving for the future, while at the same time serving the purposes of companies to hire and do research and development. There are other purposes that are served, such as stabilizing the political environment, community development, research, employment, as well as just let's have something that we can have for our retirees to draw their salary from when they're beyond working age. So there are many different purposes that are served by the function of the markets. And so sometimes I'll hear people say, well, what is the purpose of investing? And it gets to be kind of a singular one concept. And I just struggle with that a bit to say it feels like it's a multifaceted, purposeful activity, but that we want to bring our faith to bear on each part of that. Enough there for the context. I think sometimes we tend to be either the visionary with big dreams and have like, this is going to be, kind of the way that it could be if things were better. And that visionary impulse, we need that. We need people who dream big, but we also need people who are seriously deep in the weeds about the realities of the context and who know what's more realistic at this moment. How do we temper that with deeply informed thinking about the realities of what's there? And so let's move into that second section to talk about kind of the goal. If you look way down the road at what is the end game here, what is God calling us to do as participants in the market? I just want to talk a little bit about that from a moral perspective. And we'll go through this relatively quickly. When I think about investing as a general topic, this is not a special kind of investing. This is not like a subset. This is as a general topic. I see investing as a moral good. That is, it's a system that allows us to gather capital for use by others, and that is a productive way to put surplus capital to use. It's different than putting it under your mattress. It's different than burying it in the ground in the backyard. By putting money into the markets, you're inviting others to make productive use of saved capital. And so that in itself is an economic good to many, many other people. The liquidity that is provided is a social good in and of itself. And so this productivity is going to be used differently by different end users. You'll have more or less joy based on how the end users employ that capital, and some of those being better and some of those being worse. So the question kind of becomes for us is, what kind of productivity are we hoping to see in the markets? And what kind of world is it that we're hoping to foster by means of investing? Which pushes us in the direction of thinking about how can we be more judicious, or how can we be selective in the types of outcomes that we might be supporting. Ideally, and I think this is probably not just a few, but the vast majority of Christians in this space would say, yes, ideally, we would love to see companies, agencies, and projects funded and promoted that are doing good for the world, that are elevating human well-being. And I take that as a given that you would resonate with that concept. And so the challenge becomes to being that skillful manager who looks for ways to express that concern in the marketplace, expressing concern for the well-being of others while pursuing financial returns for investors. And so that becomes kind of the journey of faith and the journey of courage and prudence that managers try to press into, of how can we express both simultaneously. So the point here being, investing can be viewed as a general moral good in and of itself because of the productivity and the use of capital, but skillful investors can try to go a step beyond that and try to express a commitment for human well-being and the responsible management of Earth's resources when our dollars go to work on the markets. And so we're looking for specific types of outcomes, not just any outcome. Which brings me to a set of concerns around kind of the moral dilemmas that come up in this space. So if investing is a good thing generally, and if being a prudent and wise manager means we might try to even move beyond that into some specific goods, what about the challenges? What about the companies that we'd rather not be affiliated with or having a supporting role toward, which is a very important question. Like all human activity, investing is not just a pure and total good. All of our human activity has been impacted by the fall and has expressions of sin in lots of different specific ways. And so we as Christians recognize the reality of evil and recognize its presence in the world. But we often differ in terms of how do we understand and relate to it in shared public spaces, such as public investing. And so here's kind of where the debate comes in: is what is the right stance toward things that we disagree with or sinful behaviors in other people or groups. And so that brings us back around to the interconnected social nature of investing. This means that as participants in the market, we are going to overlap, connect, and do business with other sinners and those who do not share our moral beliefs. That is a given, and that is not something that we can realistically avoid in any sense of the word. And so the challenge becomes not how do you go out of the world and totally lose contact with other people, or how do you become a sinless person? And there's so many things that it's not. Here's what I think it is under what conditions might an otherwise good activity like investing potentially cross the line and become morally inappropriate? And so this has been a big debate for American Christians. I know you've probably overheard that or had that yourselves. Here's what I think is helpful. Some of the theologians who've done work in this space there's whole talks that can be given on this section. I'm just going to touch briefly on three simple insights. One being that the level of cooperation is important to think about. Not every cooperation is the same. Going to work for an employer is a type of cooperation that is at a certain level. Becoming an investor in a stock, owning a stock in a company is a certain level of cooperation as well. And I think the theologians that have helped us, and this goes back hundreds of years in the quite a long-standing tradition of thinking about ethical dilemmas, is saying we need to evaluate the significance of the cooperation and identifying two different types. One being formal cooperation, where an individual is with knowledge and intent supporting an evil outcome. And often that is not the case in the investing markets. You often have players, Christians, who are investing with limited options through vehicles that imply indirect involvement and some lack of understanding in terms of what they're connected to. Oftentimes, an investment vehicle like an employer plan won't even have options that could be viewed as values aligned. And so in different situations Christians find themselves in, they may have a degree of cooperation with evil that is not unethical, that would be considered very permissible. And so there's a line of thinking that Christian theologians have developed around, how can a Christian work in a setting where evil is being done, such as can a Christian nurse work in a hospital where abortions are being performed? And if so, under what conditions would that be morally acceptable or unacceptable? And so there's a whole bunch of different discussion that happens in that topic around where do you draw the line of intent and knowledge and direct support. And so without going further down that path, I'll just say that's an important thing to wrestle with. Secondly is the idea of our call to be in the world as our prophetic engagement in the world, speaking out as salt and light for the Lord. And so there are various ways in which we're called to express our Christian identity in the world through words and deeds. And this often brings us into proximity and collaboration with non-Christians. And so this is not something that you do from a distance and throw missiles back into the marketplace with messages written on them. Often it has to do with our relationships and being in proximity and knowing and being known by other people. And so I like to quote Miroslav Volf on this point, who's done a great deal of thinking on faith and culture, where he simply points out as a Christian theologian that our engagement touches on all dimensions of culture, and yet does not aim to transform any of them totally. Instead, in all of them, it also seeks and finds goods to be preserved and strengthened. It is total in scope, but limited in extent. In other words, we are not like the Taliban, who are coming in to overthrow the existing system and to set up a righteous Christian market. We are entering into a pre-existing system with salt and light, to find the goods that are inherent in the system because of God's grace and common grace on sinners, and to strengthen those goods, and to find the points of tension and compromise that can be redeemed from a Christian perspective. And so it's not a total overhaul, it is a total engagement. And so our invitation is to find ways to be Christ in the public markets. A third insight that I think is helpful here is the idea of how, as a Christian, our choices are always about finding the proper prioritization of ends. Because the Lord has called us to love him with all of our heart, soul, mind, and strength, to love our neighbor as ourselves. Everything that we do, we need to be able to rank it in terms of what is the desired outcome that the Lord would have me to be pursuing here. And this priority ranking of one possible good against other possible goods is what we're constantly doing throughout our life. And so considering multiple factors and weighing how much good is this versus how much good is that is the challenge of prudence that the Lord calls us to. This next section, I'm not totally sure this is worth a ton of time. I may just kind of fly through it. One of the big debates around U.S. investors has been, are investors responsible for the sins of their companies? I hope this hasn't distracted your guys' conversation as much as it has ours, but that is a big deal for a lot of people here to think about. I like to break it down into kind of 4 categories of answers that have been given to that question, and in terms of kind of a spectrum of how people have landed in their thinking. The first one being the most absolute in terms of saying, yes, the investor is responsible for the sins of the company, represented by this quote from one of our fund families where he says, the investor is the co-author of the wrongful act. So from this perspective, this group of Christians really feels like there's full moral responsibility that they can attribute to the investor. And so their goal kind of becomes zero tolerance screening. And that really drives their whole philosophy and practice. Way over on the other side, you have a different group of people, Christians in the Kingdom Advisors Network as well, who are thinking about this in a different way and are saying that the moral responsibility is little to none, and saying that there is such a disparity of knowledge and intent, that the gap is so big that there is basically no moral responsibility can be pinned on the investors, and the goal being simply prudence and attempting to avoid unnecessary risk. Coming back over to the middle, I divide this partial, high partial, and low partial. Here on the high end, you'll find a group of managers in the U.S. who have kind of staked out a position just one step back from the absolute viewpoint of saying there is significant culpability here, but not able to say fully and totally responsible. And so their goal tends to be just that of maintaining integrity by avoiding bad profits as much as possible. And then a low partial viewpoint, which actually takes it kind of in a different direction and saying that the ownership is not individual, but is social in nature. It's diffuse, it's shared among the investors, and so that it's not full on anyone in particular. Just like when you're voting in a national election, no one individual is responsible for the outcome, but collectively the responsibility is shared. And so that provides the concept of corporate responsibility in a limited basis. So the goal there being more of one of discernment. How does my participation affect an outcome, or how does my participation signal a belief or a conviction? And so they're typically in this bucket, you'll find managers looking to find a style of investing that avoids pitting their beliefs against their investment companies and avoiding scandalous selections in that regard. And so there you have a couple of quotes from groups that are saying that they're going to measure their involvement, they're going to make decisions about degree of involvement, they're going to set thresholds, 5%, 10%, and they're going to make judgment calls. They're not aiming for the zero tolerance outcome. Summary. Hopefully something of this can be summarized from a Christian perspective. My perspective coming to this is that the goal of investing, if you have to summarize it in just one goal, would be to glorify God by expressing Christ-likeness in the markets, by expressing godly Christ-like choices in that context. And so in practice, Christ-like investing will vary from time and place, person and group. And just like the Lord Jesus, when he was here, he didn't deal with every individual identically. He had a unique and personalized response to each person, each sinner who he met. And so that Christ-like redemptive engagement with other sinners is our goal as well, that we would reflect the grace of Christ to those that we work with in this space. Now, ideally, might want to invest in certain companies that promote the common good. Realistically, there's sin in all of the companies. And so our goal might be to avoid enabling evil while seeking to achieve as much good as possible. Which brings me kind of to the last and third topic of, okay, if that's a goal that we're going after, how might investors go at it? And what would be some tools that we could consider toward moving in that direction? And so here I just want to kind of lay out, I have a quote from one of our theologians about the nature of evil and how we labor under it, is that if evil is both individual and personal or social in nature, it must be attacked by a combination of strategies rather than merely one. As there are structures of evil in the world that transcend an individual human will, some means of renovating these structures must be pursued. And so I find in this quote just an invitation to think creatively about pressing back against structures that have been impacted by sinful choices over time. This, to me, is just a reminder that there will be more than one way to approach this application of Christ-likeness. So the first, I have a couple of examples I just want to put up here briefly for us to think about. The first one is more of an academic example. It comes from the University of Zurich, and they have a longer document, this is pulled from, that talks about different strategies that investors have used to promote ethical principles. And so in this, you have kind of a stair-stepping grouping of strategies from 1 through 7, ranked in their estimation from lower impact toward higher impact. And starting with number 2 being an exclusion strategy of companies that have not met a preset criteria, the screening strategy. Number 3 being a selection of industry leaders based on, for example, ESG criteria. And number 4 being the selection of sustainable sectors based on certain investment themes, whether medical, community housing, so forth. The first 4, they group together in a heading called investments for signaling, that these are signaling behaviors, that they express a sentiment, that they express a belief, but that they in and of themselves are very indirect in terms of any change of outcome. Number 5, they label as stewardship, that is the active engagement in corporate policy of the invested companies. That active engagement as shareholders is kind of the first place where they say this is actually making an impact on the behavior of companies, more so than just avoidance or screening behaviors. 6th and 7th is more getting into the private market investments, but that's where they deal with the investing for impact, measurable and social environmental outcomes, and funding businesses that are aligned with one's values. And so that tends to be expressed more fully in the private market space, but some have done work in that as well in the public markets. This being an academic piece, probably a little bit more detailed than what we would be used to looking at. Here's an example of a fund manager here in the US that's identified 7 behaviors that they feel have value. And the way the little triangle moves from left to right indicates the degree of impact or value that they find in this strategy. Far right being the most impactful: community development investing, advocacy and education, company engagement, positive impact bonds being the most impactful strategies that they have identified. And then some of the lesser impactful ones being the integration, proxy voting, and the value screening behaviors. As advisors, I know when I'm talking with advisors, they are often looking at these strategies as well, but in a simpler way of saying, how can I find funds that align with my beliefs? And so I often encourage them to think about, well, negative screening is a step that a lot of funds do, but it's relatively impotent in terms of changing outcomes or behaviors. Where can we take a step beyond that and move toward values integration, corporate engagement, and ultimately impact investing? And so as advisors wrestle through those priorities, I like to see them have a fuller picture of what can be done in that context. Some of the phrases that you'll often hear in the Kingdom Advisors orbit are these three words: avoid, embrace, engage. And I like to line them up on kind of a spectrum chart here, where we're actually looking to avoid certain negative impacts that companies might be having. On the high end, we're looking to have embrace of positive impact and deeper impact. And then in the middle space, where there's a mixed outcome, like a large cap company that's doing 5% of business in something you might disagree with, but 95% is really good for the world. Would we be able to invest in that space and have a difference, have a voice at the table for the 5%? And so that's a way of looking at kind of the spectrum of impact from a consumer perspective. I'm going to wrap it up here so we don't have to run out of time for discussion. Ultimately, we are looking to see how can we honor Christ with our public market engagement and expand our ability to represent him well in this space together. And so I just submit to you that that is a possibility, and by God's grace, I am excited to see how it plays out over time here in the U.S. and in Canada as well. Now, Lauren and I put together just a couple of thoughts that might be helpful for questions and answers, but I won't read them off to you, but I'll hand it back to you, Lauren, and we'll have a time here for discussion together.
That is great. Thank you, Luke. Lots to chew on there for sure. And I'd love to have your input at this point, because I know one of the frustrations for us in Canada has basically been, well, we don't have faith-based investing options in Canada. So I would basically, at least not to a large extent, if it is, it's certainly under the radar for most advisors who are looking for investment options. So I'd like to open it up, and I guess that first question kind of comes to mind here. What are the current limitations and challenges? And I think for us, that's one of the challenges. But any thoughts or questions for Luke from the presentation, first of all? And you can feel free to unmute and jump into the conversation here as well. Where is progress being made, or where does it need to be started for us in Canada? So I'm just going to remove that from the screen. And yeah, Tim McElvain.
Yeah, hi, Luke. Thanks for your presentation. I'm just curious, what do you think the market in the U.S. is for? I'm talking about very specific faith-focused investing, not and because I'm trying to back end that into what they call in the software business the total addressable market is in Canada as well.
There's a couple ways of assessing that. One would be to estimate the number of Christians, and then to say, as a percentage of society, approximately how many dollars are under their management, and then to assess, okay, if they invested this way, what would that look like? However, probably more to the point is not how many could, but how many are, and how many are expressing interest in that. I think that the interest level keeps rising here. It feels like from almost like a cultural moment that people are asking for values-aligned solutions more than before. It feels like a time when people are taking a little bit more seriously their potential alignment with ideas in the marketplace. Now, I recognize that sometimes that has been problematic, and that sometimes it represents more of a political reaction than a thoughtful decision. So I see that as being a double-edged sword, that the social impulse of, well, I just want to align with those who are like me, can be not the most balanced kind of a reaction, but that there is an increasing appetite for this type of alignment in the U.S. that we're seeing. So with our MoneyWise call, people are almost every day asking about this and searching for, how can I find an advisor who would help me do this? So I see a good deal of interest there, but I also know that there's also a lot of apathy. When I talk with general friends at church and others around the city, many have never heard of it. Many haven't really put any serious thought into it. So there's a lot of potential there for growth and learning as well, I would say.
I'll just chime in real quick. If anybody read the article Bob Dole sent out this morning, The History of Value-Based Investing, the article, in here, actually, he talked about the fact of, younger people, the Generation Z, the millennials, are becoming more and more aware and more looking for to have those personal values guide their investment choices. And I think you're right, Luke. I think a lot of that has to do with the information that's available to them, right? I mean, the power of the internet, right? But I also think that, and maybe this is the problem in Canada, is we don't have enough people talking about it. But that's because of the limitations.
Yeah, I can add to that, answer that, Tim, as well, because we've done quite a bit of research on that. And there's the US market, just from a rough figure, seemed to be about 50 billion in AUM, just for faith-based, the main managers. And Canada, we think, would be about a tenth of that. And then when we start looking at it from, Catholic or faith-based universities that have some sort of a mandate within that, foundations, churches that have money. There's the Baptist Foundation in Canada that's massive. There's the Catholic Foundation in Canada that's massive. So we were thinking there's at least $5 billion there, and 4 million Christians within Canada, if it's just a 10% of the population that really don't have this service, other than the funds that Brian's provided and some that Glenn has from a private perspective. Those are really the only two faith-based products out there. But there is quite an addressable market, but some people, they just don't know what they need. Like, it's not even really something that crosses people's minds, like is what we've found over the last 2 or 3 years, just investigating what's out there and trying to get to a certain point ourselves where we're able to have a faith-based fund.
And our jobs as financial advisors, if you're a financial advisor, our job is to educate clients, right? When I ask the question to my clients, when I sit down with them and we talk about investing, is there anything you would not want to invest in that goes against your values or beliefs? And a lot of times I get the question, well, how come nobody's ever asked me that? Because I'm intrigued by it. I want to know more, right? They don't know that there's potentially options out there. It's unfortunate, the options from a retail market standpoint are limited. And so it's not a matter of exclusionary. It's a matter of trying to minimize some of those exposures to things that they're not, in line with their values.
So in that sense, it sounds like the advisor can, in many respects, drive the demand by educating their clients and making them aware of it. It's like anything. Is it not the role of the advisor to educate, therefore creating a demand that then portfolio managers will need to address? And I'm curious as to where we are in Canada with providing some solutions, because I guess some of it is going to depend on how advisors are licensed as well. That's some of the challenges as to what product they're able to tap into, or what products they're able to tap into.
Yeah. Maybe I could speak a little bit. Obviously, this is, for those of you who know me, this is something I'm pretty passionate about. And I'll use an analogy that's been my experience so far in Canada. When I'm a pilot as well, and as a pilot, one of the coveted things is getting multi-engine flying time, because then you can be insured, et cetera, et cetera. And the challenge is that you can't pay for it out of pocket because it costs too much money. And insurers want it and all this, but nobody wants to hire you without having it, but there's no way to actually get it until you're actually insurable. So how do you get insurable or you get hours? Well, how do you get hours without being insurable? So you're kind of in this odd situation. And it's the same so far, it seems my experiences in Canada with the funds that we've launched is the common thing on the advisor side is, you know, we want more AUM, we want a 3-year, 5-year history, we want this, this, this. Okay, that's all well and good, but you don't get a 3-year history, you don't get a 5-year history, and you don't get an AUM without advisors actually using the funds either. So you kind of have this thing where, well, you want something, but you want everybody else to do it first so that then you can have a 3 to 5-year history, and nobody ends up taking the step to do it. My experience with the end investor has been overwhelmingly that they want it. I probably can count on one hand how many we've had that have reached out via just the form on our website and not become clients. And those have been because they're in provinces we aren't licensed in, I think. So overwhelmingly, I think the end investor wants it. And a lot of times I think as advisors are the hurdle kind of in the way, actually.
Yeah, I would agree with Brian on that. That seems to be the biggest hurdle is the gatekeepers, and whatever that hurdle is of actually committing and getting money in a fund, like finding that critical mass, as Brian mentioned. You know, getting someone that's got experience, getting the scalability as far as like a regulated mutual fund that's widely distributable, getting that fund on the dealer shelves so that people can actually invest in it. Like that's actually been more of the hurdle rather than the actual client interest. Like every client we talk to is like, heck yes, as Colin was saying, but actually getting to the point where we have like a fund manager that's credible with a track record, enough money in that fund so that the fees and the MER aren't like burdensome, and then getting that distributed onto it, like enough dealer shelves. That's more of the issue. It's not the demand, it's more of the nuts and bolts of like the professionals within there that, like, you know, either don't want to risk reputation, or, you know, they don't want to put their own dollars on the line, or there's a whole lot of things. I mean, there's 100 CKA advisors in Canada. Like it's actually amazing that like we're at this point and we haven't got significant traction yet. Like if 100 advisors were really asking for this, then it would be there, right? So that's kind of been our frustrations. Like Jonathan and I, we've tried a few times. Like a lot of our issues have been, well, we've got a firm that's registered in one way, and trying to take that along with us has been the issue. And we've spoken with Brian. Like, I mean, everybody on this call, other than Maria and Haley and Colin, we've spoken to about this issue at length. So like that's kind of where we sit in the industry. I'd say like the people doing the most around this would be everybody on this call. So actually getting where the landscape lies, I think we can get a pretty accurate sense. Yeah, and we know where it sits right now, and that's a good place to be. Really, we just need to get that traction, as Brian was saying. You know, advisors to actually like you know, Brian's got 3 funds, Glenn's got some funds, Tim's got a fund that's widely available. But I don't think you market it as a faith-based fund, right? So I think there's elements within there where we have the makings of getting the industry going and actually having faith-based products available widely. But we just haven't got over that hurdle yet of actually getting it to market.
And you almost need, in my assessment, you almost need some advisor commitment to, if you launch this, you could expect or reasonably expect X amount in AUM. And I say that because we have the one fund that's sub-advised by Eventide out of the States. I think it's a great fund. The team at Eventide's great. You can rely on their experience instead of mine. Like they're the sub-advisor taking care of the investment selection, etc. So let's take that. Now, if we could get a commitment from advisors that, hey, if you launch this as an ETF, I think we could put in $30 million. We'd launch it ASAP. But we need some sort of commitment level because it's going to cost X amount to get that to market, and it's going to cost X amount to maintain. But if we had that commitment level, I'd launch it as an ETF ASAP. I think it'd be a great thing to have on the Canadian market. So I think that there's, in my case, I feel like we're right on that edge of where, if we got a few people who are committed to that, we would bring that fund to market as an ETF instead of an OM fund, which would then open the doors quite a bit. So,
Tim, were you going to respond? I'd like to have some response even from Glenn and Haley as well. Matt, you were going to say something as well, I believe.
No, we can stay on this topic. I was just going to move to another area.
Tim, did you want to respond to Matt?
You're right. I kind of call myself a value fund with values, Matt. So, I skew more to the kind of United Church rather than kind of Catholic, and that makes a difference in some of the things you'd approach in the portfolio as well. I think to assume faith-based investing is a monolithical thing is a huge error by both suppliers and advisors, because it's such a personal issue, and I think that's part of the issue you're struggling with a little bit, Brian. Is where does someone come in their willingness to trade investment returns for their beliefs, and that depends an awful lot, I think, where they sit on that belief spectrum.
Yeah, good. Glenn, did you want to jump in here?
Yeah, I don't disagree with what's being said. Yeah, I didn't really have much to contribute. I think it's a given that, throw our assets, everybody's going to jump in and say, yeah, I'll throw together whatever you want if I can get assets to do it. And that's the struggle, is that the nature of the Canadian market is so fractured from registration standpoint, and what people can distribute and can't distribute, and how you come together. So navigating through that context and finding a structure or a platform that is going to be effective and efficient to deliver is kind of the first hurdle to get over. And then from there, a little bit in line with what Tim says, is identifying, well, what structure or what strategy is actually one that a broad demographic of the Christian community is going to align enough with to get that initial economies of scale that's required to make it efficient and effective for those that are trying to run the particular product. So, to me, it's not just getting people interested. I almost feel like that's less of the issue, and it probably goes to what has been said on the call, where people are interested when presenting the opportunities. The challenge is structural in nature within the Canadian marketplace, and then I think narrowing down what it needs to look like. Is it a prospectus fund? Is it an OM fund? We've launched separately managed account structure. We're wrestling as a team with whether that needs to move into an OM and into a prospectus fund. And it all comes down to distribution and how you're going to get that out to, those financial advisors and individuals that are interested in that particular strategy. And that's the rub.
Yeah. Thank you, Glenn. And by the way, I didn't really introduce everyone or even ask you to introduce yourselves. Some of you know who each other are. I think, Matt, you've said you've talked to everybody, but
most everybody. I haven't met Haley and I haven't met Maria, and I've met Colin on down in Florida, but that's about it.
okay. So Maria and Glenn are with Capstone in BC. Tim really is also in BC with McIlvaine Investment Trust. Is that the official name, Tim? Somewhere thereabouts?
My wife said no one can spell my last name, so I changed my website to valuefund.com because.
Very good. And Matt and Jonathan in Nova Scotia. The two Bryans are in Ontario, along with Colin. And Haley is probably the newest to the group, I would say. So, Haley, if you want to introduce yourself, that would be awesome.
Sure. Yes, I'd be happy to. So my name is Haley Thomas. I am based in Ontario as well. Today I'm filling in for Paul Tyers, who I guess is a member of Kingdom Advisors. So this is sort of one of my first exposures to this, which is why I haven't had too much to add. But, just touching, like I really, to be honest, I haven't even considered faith-based investing. The only exposure I really have is to socially responsible investing. And that really has come from a pull from my clients. So that, but I think it's also just getting exposure to what the offerings could be.
Right. Luke, I want to go back to you because I'm curious if this sort of conversation, if you've experienced some of this on the ground level in the U.S. in the process of establishing this sort of thing there, or what your thoughts are.
Yeah, my encouragement would be to set up a future gathering for yourselves to think about what kinds of potential collaborations you might work toward over time. And I know that the large faith-driven investment conversation here often started with a few people at a restaurant or gathering friends in a Zoom room and talk about strategy moving forward. So I would encourage you to think about maybe forming a community around this topic. And there are other thoughtful leaders that you could bring in. I'm thinking of Tim McCready from Australia, who's now moved to Denver, Colorado, but he's told me he would love to meet with the Canada group and encourage you guys, because he's a fun manager who was pioneering in this space as well. So I would just commend this type of gathering. If you could foresee pulling together a couple of times a year, that might create some momentum over time.
Good. That's a great suggestion. Great idea. And we can certainly explore that for sure and make that happen. I have no issue with that. I think that's kind of why I brought together this group here now, is because I guess everybody's been kind of doing their own thing and trying to accomplish something. And I would like for us certainly to be workers together in Christ and accomplishing the greater good for Canada. That's ultimately, my goal is to eventually providing something that if there's a Christian client out there and they want a faith-based option, they can get it. And if we can be used, any of us on this call can be used to bring that about, that would be absolutely amazing. And ultimately, I thought, Luke, as you were sharing about the purpose of investing, whether it's for the client to make money, stabilizing the economy, and I just jotted down, okay, that's not the only purpose, because a greater purpose can actually be the kingdom. So I kind of want to wrap up our time together. And Brian Barsnes, you haven't had the opportunity to share at all here today, but you've been at the grassroots of this movement in Canada. So I want to give the last word to you, and wondering if you would also close our time in prayer. I would really appreciate that. So any thoughts, and then close in prayer.
I'm just encouraged where it's headed in Canada. I think we're on a cusp, and I'm encouraged. There's challenges. There's a long ways to go, but as the Lord leads, I believe He's going to get us there, and one step closer to honoring Him in more of what we do. So let's just close in prayer.
Thank you.
Dear Lord, thank you for this group. Thank you for this time. I thank you for all the hearts and the desires and the works they're doing just to bring you into their businesses more, Lord. And I just pray you'd bless everyone here, continue to guide us, protect us. And yeah, give us the insights, the knowledge, and the purpose in practical ways to move this industry forward for your glory and honor, I pray in Jesus' name. Amen.
Amen. Thank you, everyone, for your time today. Really appreciate it. And I will certainly be in touch to reconvene sometime in 2023.
Thank
you so much.
Merry Christmas to all.
Merry Christmas.
Merry Christmas.
Merry Christmas.